Alright, so welcome to the last video of chapter 1. In this video, I will be discussing about liquidity. Alright, so what is liquidity? Maybe you have heard about liquidity a lot of times already, or maybe you haven't heard of it yet. It's the most used term out there, especially if you're looking at the charts of other people. Alright, so what is liquidity? Liquidity refers to how easily an asset can be bought or sold without significantly impacting its price. So, what does it mean? Alright, so this simply means that the market is taking out liquidity without impacting the market so heavily. Alright, so for example, the market is overall bullish, right? For example, market is bullish. Then it created a swing low. Then the market has gone up. Then the price has taken out that liquidity just below the old low or equal lows. So we can see how easily an asset can be bought or sold without significantly impacting its price. Alright, in simple terms, the market will manipulate the price to go just a little bit lower to take out a liquidity and then continuing higher to its real direction. Alright? So, in layman's term, liquidities are where buy and sell orders are concentrated. Right? So, that means the retail money. Who are those again? The retail money. Alright, so that is us. That's all the traders and also the small bank traders. Alright? All of the retail traders, all of individual traders that are trading individually. Right? That's you and me and all of the other people you are seeing in social media space. Right? Those are all liquidity. We are all liquidity. We are just the money that is being taken by the big banks, the smart money, and the market makers. All right? We are giving them money. So, for example, right here, we are overall bullish, right? We have higher high right here, then we have higher low, and then we have higher high. This swing high right here is called buy side liquidity, or for short version, we just use BSL, buy side liquidity. All right. And also right here on the swing low, we call it sell side liquidity. Or for short, we call it SSL, sell side liquidity. Alright, so don't worry, I will give you all the shortcut, the acronyms of the ICT and ASMC concept. Alright, so I will send it to you and you can refer to all of the acronyms that we use in this mentorship. Alright, so these are all liquidities right here and right here. We have sell side liquidity right here and buy side liquidity right here. So what does it mean? It means that there are pending and active orders right here. There are traders that are entering positions right here to go long, and there are traders that entering positions right here to go short. Also, there are also active orders that are waiting to get triggered right here. For example, a person has entered a trade right here. His stop loss is right around here. So it means there's a lot of liquidity. There are pending active orders right here, and there are also active orders right here. Alright, so always remember there are liquidities above old highs and old lows, All right. All right. So as we can see right here, we have a bullish price action. We have here higher highs and then higher lows. Then the market has went up once again, creating higher highs and then higher low. Then another higher highs right here, right? And the price has failed to continue going higher. So, what should you do? Alright, so as we can see right here, we are overall bullish, right? Meaning we are going up strongly. So, most traders will now try to look for short position without confirmation. Alright? That's the dumbest thing that you can do. You always need to look for the higher time frame, order flow, and market structure. As we can see right here, the price has taken out the liquidities right here. We have old lows right here and another old lows right here. Since we are overall bullish, the price will now continue going higher, right? This is liquidity and also manipulation. You can see right here, right? You almost got manipulated by the smart money. That's why they are called smart money. They are smart. They are manipulating people. They know how to manipulate people. Most traders will try to look for short positions right here, thinking it will now reverse lower. But it's just a liquidity grab. It's just taking out a liquidity. Liquidity right here, all lows, and another liquidity right here before continue going higher. Also, we have another example right here. We are overall bearish, right? And we have created equal highs right here and also equal lows right here. These are called engineered liquidity. These are all made by the smart money, the market makers, because they know that retail traders will deem this as a support and resistance. Retail traders will think this is a very, very strong resistance and very strong support. They will say, oh, this is a very strong support since we have three touches. But that is all engineered liquidity. That is how the market will manipulate you. As we can see right here, we have equal highs and equal lows. For sure, there's a lot of traders out there that will enter right here because they will think this is a very strong resistance, right? So they will have orders right around here. Their stop loss is just right above this equal highs, maybe around here or maybe around this area, right? And also for sure, there's a lot of traders that will also enter when the market has touched once again this support area, thinking this is a very strong support since we have three touches. But these are all engineered liquidity. So let's see what the market will do. Ooh, as you can see, the price has now went higher. Alright, so what do you think the other people will do? Some traders will enter right here on the retest, right? They call it break and retest, and now the price will go higher. Is it? The resistance traders that enter right here has now been taken out, right? Also now we have here retest traders, right? So the retest traders that entered right here also got stopped out already. Also, now these traders right here that entered support right around here is now in drawdown. Now the price has retraced back higher. These traders will think, oh, now it will just continue going higher. Is it? And now they're gone. You see that? That is how the market makers and the smart money and the big banks manipulate the market. Alright? At the beginning of my training journey, I've been manipulated countless of times also until I figured this out. Alright? See that? This is just an example. I will show you a lot of examples later on and in this full mentorship. So, we have three types of liquidity. The first one is we have old highs and old lows. Like I said, we have here liquidity in old highs, liquidity in old lows, liquidity in the old highs, and liquidity in old lows. There are stop loss right here, right here, right here, and right here. There are also breakout traders right here, right here, right here, and right here. So they are all liquidity. It's formed above swing highs and swing lows. Swing high, swing low. Swing high, swing low. Alright, so we have liquidities right here, right here, right here, and right here. So this is a live market example. So try to spot where the liquidities are using the first type of liquidity, the old highs and old lows liquidity. Alright, so I will now show it to you. These are all the liquidity. We have here liquidity in the old lows, liquidity in old highs. Now it has gone lower. We have liquidity right here in this swing low. A lot of liquidity right here also in swing high, old lows, old high, old lows, old high, old lows, old highs. Alright, so liquidities can be found inside these swing points. So this is the second type of liquidity, the trend line liquidity. Alright, so this is also the strong confluence of retail traders, the trend line entry, the trend line breakout, the trend line retest. Alright, so they will think these are all just another resistance and these are all just straight diagonal line support. Alright, so trendline liquidity formed when we have obvious trendline support and resistance. Right here, as we can see, we have very strong obvious resistance right here. Also right here, we have very strong support, they thought so. Alright, so we have here trendline liquidity. Alright, so here is the market example of trendline liquidity, right? Actually, this is one of my favorite liquidity, right? My most favorite is the equal highs and equal lows liquidity, right? So we use this liquidity as a confluence and a target. I'll show you what I mean. Alright, so here we have trendline liquidity. As we can see right here, we have very straight trend line right here. This is the call resistance. Also another strong trend line right here, which they called support trend line. All right, so what do you think the price will do? All right, so we have trend line right here. As we can see, after taking out that buy side liquidity, the price has went down lower, taking out all of this trend line right here. All right, so that is how liquidity is. This is how the market makers and smart money manipulate the market, right? These are all engineered liquidity, right? They made this. They made the price behave like this to form these patterns that retail traders are looking for. So this is the last type of liquidity, my most favorite liquidity, the equal highs and equal lows liquidity. Alright, as you already know, it's formed when we have equal highs and equal lows. Right here we have equal lows. This is what they call support, strong support with 3 touches. This is what they call strong resistance with 3 touches already. Alright, so as we can see, the price has took out this side of liquidity first. It has went down first, taking out this equal lows right here. There's a lot of stop loss right here. There's also a lot of breakout traders entering short right here, thinking the market will now continue going lower, but they were wrong. And now the market has shifted higher, taking out these equal highs also. A lot of traders entered short when price has went back around here. Now let's see what the price will do. Alright, so they entered short right here. Maybe their stop loss is right above here, or maybe they have already been stopped out. And now the market will go to the real direction of the move. Alright, so as we can see, the market is engineering liquidity for manipulation. Alright, so remember this. The market makers and the smart money are always engineering liquidity. Alright, when you see equal highs and equal lows, there are a lot of traders out there, retail traders out there that have their stop losses above these equal highs and equal lows. And they are the main targets of the smart money. Alright, so this is the live example of equal lows. We have equal highs right here and equal lows. So the market will take out this liquidity around here. So the traders that have their stop loss right about here has already been taken out. And for the breakout traders, they are now in drawdown. Now they are stopped out. Also, for the traders that have entered short position right here in the resistance has now been taken out. And now the price will continue to the real direction. So what's the use of liquidity? Alright, so this is very important. I need you to remember this. You will be using liquidity in your whole trading career. Right? So we use liquidity as a confluence and a target. Alright? That's all we need for liquidity. We use liquidity as a confluence and as a target. So what do I mean by that? Alright, so for example right here, we are bullish. Alright, so the market is bullish. We form trend line liquidity out above here. We also have trend line liquidity around here, right? So there's a lot of liquidity right here. So we use liquidity as a confluence and a target. So for example, we have equal lows right here in the form of trend line, and the price has went up. It has taken these old highs right here. There's a lot of liquidity right here. This is our confluence, right? This is a liquidity. Remember, this is an old high. This is our very first type of liquidity, the old highs. So, this is our confluence for this setup. Since we have taken out this liquidity right here, our targets are right here. Right? So, as we can see, this is our confluence. We have taken out these old highs right here, which is liquidity. Now we are using this trend line right here as our target. For example, we have shifted right here. Here we have a very big fair value gap. We can enter right here and then target this trend line right here. So we have our confluence right here, taking out these old highs. And our target right here, the trend line liquidity. Alright, so you need to remember this always. We can use liquidity as a confluence and a target. Alright, so if you have not taken out a liquidity right here, this is not a good setup. Alright, so we always need to look for a liquidity grab before looking for a trade. Alright, so I hope you understand this liquidity video. Alright, so this is another example. As we can see right here, we have equal highs once again. And also we have equal lows right here. Alright, so first step, we have taken out the equal lows right here. Alright, so this is our confluence, number one confluence. Now also we have liquidity right here. We will use this liquidity grab right here to enter to our position, aiming for the liquidity right around here. Alright, so that is it for this video. I hope you learned a lot. I hope you are writing down every single thing that you are learning in this video. I'll see you on the next video.